Investors, hello and welcome. This is Analyst Insight from Stock AI Insights, and I'm your Chief AI Analyst. Today, we are diving deep into the latest moves from the one and only Michael Burry, who has just dropped 4 brand new stock picks, and you're going to want to hear this.
But first, the important bit. Please remember, this analysis is for educational purposes only. It is not investment advice, and all investing, as you know, involves risk. All right, let's get into it.
So, you might be asking yourself, why are we suddenly hearing directly from the guy famous from The Big Short? Well, after closing his fund to outside money, he gave a very simple reason. In his own words, he felt muzzled and wanted to speak freely. He's officially unchanged.
Here's the game plan for today. First, we'll look at what Burry Unchained really means. Then, we'll break down his classic bargain hunting strategy. After that, we'll dissect the 4 stocks he's buying, look at what he's betting against, and finally, wrap it all up with our key analyst takeaway.
So, what does this new voice actually sound like? Well, by stepping away from the constraints of managing a public hedge fund, he's opened up a direct channel to all of us through a new Substack newsletter. No more filters.
And you have to love the name he chose, Cassandra Unchained. For anyone who knows their Greek mythology, Cassandra was the prophetess who was always right but never believed. I mean, talk about a perfect metaphor for how Burry sees himself, a contrarian trying to warn a market that just doesn't want to listen.
Okay, so now that he's speaking freely, what's the actual strategy behind his new picks? It really boils down to his classic playbook, finding incredible value where pretty much everyone else is running for the hills. And his playbook is crystal clear. He's not chasing the hot trends. No, he's a hunter. He's looking for smaller, beaten-down stocks that have been tossed aside. He even uses the end of the year to his advantage, scooping up what other funds are selling for tax reasons. And these aren't quick trades either. We're talking a minimum hold of 3 to 5 years.
And he's not being coy about where he's looking. He's told us exactly where his hunting ground is, saying the $2 to $12 billion market cap range is, quote, the most fertile area as I see it today.
Now look at this chart. This really paints the picture of his beaten-down thesis. I mean, before they rallied a bit, these stocks were getting hammered. Lululemon down 52%, Molina Healthcare down 49%, Shift4 Payments down 32%. Where most people see a disaster, Michael Burry clearly sees a fire sale.
All right, let's get to the good stuff. What are the actual companies that fit into this deep value playbook? Let's dissect the 4 long positions that he has now put on the record. Here we go. He's long Lululemon in apparel, Molina Healthcare in health insurance, Shift4 Payments in, well, payment processing, and Fannie Mae in mortgage finance. It's such an interesting and diverse mix, isn't it? Consumer, healthcare, fintech, and finance, all totally different sectors. Now, that Fannie Mae pick is a really big deal. Why? Because it trades over the counter, which means he never, ever had to disclose it in his official SEC filings before. This is brand new information, something we're only learning because he decided to open up his playbook.
But here's the thing about Burry. He's not just buying stocks he thinks are cheap. A huge part of his strategy is also betting against the companies he thinks are wildly expensive. He's playing both offense and defense at the same time.
And his strategy is just a beautiful classic barbell. On one end, you've got these beaten-down value stocks. On the other end, he's shorting the darlings of the AI boom. We're talking Palantir and NVIDIA. It's the ultimate showdown. Underappreciated fundamentals versus what he clearly sees as stretched, hype-driven valuations. And Burry himself sums it all up with this fantastic quote. He says that being long a value stock like Molina Healthcare while being short a hype stock like Palantir is like peanut butter and bananas. To him, it's not a contradiction at all. It's a perfect combination.
So, when you put all these pieces together, what is the single biggest takeaway from all of Burry's latest revelations? What's the bottom line here?
The verdict is this. Burry is making an incredibly clear bet on fundamental value over speculative hype. He's convinced that solid, overlooked businesses in boring sectors will ultimately win out against the high-flying AI names that he believes are just running on fumes. It's a bold, classic, contrarian move.
So, that leaves us with a big question, right? Burry is betting on value over hype. Is the market actually listening this time? I'd love to know what you think. Drop your thoughts in the comments below, and we'll see you next time.